Hey guys! Welcome to Financial Health and Wealth, where we aim to educate people on multiple ways to improve their lives financially and have worry-free, healthy lives. Today we're going to talk about why the 401k betrayed millions of Americans. If you'd like to see more of this type of content, then like and subscribe by clicking the link below. You need to know this number, 18,433. That's the median amount in the 401k savings account, according to a report by the Employee Benefit Research Institute. Almost 40% of employees have less than $10,000, even as the proportion of companies offering alternatives like defined benefit pensions continues to drop. Older workers do tend to have more savings. At Vanguard, for example, the median for savers aged 55 to 64 in 2013 was $76,381. But even at that level, millions of workers nearing retirement are on the track to leave the workforce with savings that do not even approach what they will need for healthcare, let alone daily living. So what's the issue? To be sure, tax advantage 401k plans have provided a means for millions of retirement savers to build a nest egg. More than 3/4 of employers use such defined contribution plans as the main retirement income option for employees. And most of them offer matching contribution programs which further enhance employees' abilities to accumulate wealth. But shifting responsibility for growing retirement income from employers to individuals has caused issues for many American workers, particularly in the face of income freezes and a lack of investment expertise. For them, the grand 401k experiment has been a failure. It's just not working as intended. It wasn't supposed to be this way. The 401k account came into being quietly as a clause in the Revenue Act of 1978. The clause said employees could choose to defer some compensation until retirement and that they would not be taxed until that time. And companies had long offered deferred compensation arrangements, but employers and the IRS had been going back and forth about their tax treatment. Now, 401ks were never designed as the nation's primary retirement system. In 1981, the IRS clarified that 401k plan participants could defer regular wages, not just bonuses, and the plans began to spread. By 1985, there were 30,000 401k plans in existence, and 10 years later, that figure was over 200,000. As of 2013, there were 638,000 plans in place with 89 million participants. The assets in defined contribution plans totaled $6.6 trillion, 3/4 of the way through 2014. But a funny thing happened as 401k plans began to multiply. Defined benefit plans started disappearing. In 1985, the year where there were 30,000 401k plans, defined benefit plans numbered 170,000, according to the Investment Company Institute. By 2005, there were just 41,000 defined benefit plans and 417,000 401k plans. Workers overvalued the promise of the 401k and the prospect of amassing investment wealth, so they accepted the change. Meanwhile, companies found that providing defined contribution plans cost them less than a pension plan. But the new plans had two key differences. Participation in 401k plans is optional, and while pensions provide income for the rest of your life, a 401k plan offers no such certainty. That concept may not have been in the forefront of employees' minds at the start, but problems with 401k surfaced early. For one thing, employee participation in 401k plans never became anywhere near universal, despite aggressive marketing by investment firms and appeals by employers and consumer advocates to save more. I'm sure you know at least one coworker that's been working there forever and they still haven't opened a 401k plan. The employees who did participate tended to be better paid, since those people could defer income more easily. Most of the people contributing as much as they were allowed tended to have incomes of $126,000 or more. Fees have been another problem. As a result of high fees, fund balances in defined contribution plans are about 20% less than they need otherwise be. The Department of Labor established new rules requiring more disclosure of fees in 2012, but it faced strong opposition from the industry. Most employees also turned out to be less than terrific investors, making mistakes like selling low, buying high, or shying away from optimal asset classes at the wrong time. Another problem is that when 401k savers retire, they often opt to take their savings in a lump sum and roll the money into IRAs, which may entail higher fees and expose them to conflicted investment advice. Overall, conflicted investment advice costs savers $17 billion every year. The result of all these shortcomings? Some 52% of American households were at risk of being unable to maintain their standard of living, even though a strong bull market should have pushed savings higher, and the government gives up billions in tax revenue to subsidize these plans. As problems mount with the 401ks, Americans worry about their retirement security are intensifying. A 2014 Harris poll found that 74% of Americans were worried about having enough income in retirement. And in a survey published recently by the National Institute on Retirement Security, 86% of respondents agree that the country is facing a retirement crisis, and with that opinion strongest amongst the high earners. Changes may come, but for now, 401k plans and their ilk remain America's predominant workplace retirement savings vehicle. Millions of Americans still struggle to save enough to cover the cost of living in their golden years. Fortunately, there are options that provide better stability, less fees, and protection. Those other options would include IRAs and 401ks that are actually self-managed through companies like Vanguard or Fidelity, investment stocks that you can do on your own through particular companies, maybe like Robinhood, also putting money into investments as in real estate, REIT funds, as well as using things like velocity banking through your whole life insurance as well with cash value. If you want to know more about some of these options, comment below and I'll go over what those are in another video. Thanks for watching. If you enjoyed hearing about the ways that the 401k has betrayed America, feel free to comment below and maybe we can do some additional videos about more details and options regarding how that's structured and how it works. And the main thing is to just always look for ways to improve yourself financially. And as always, don't forget, if you like what you hear, hit down below, like and subscribe, and so you can get more of this content. Thanks, and you guys have a great day.